Hi, Shae Russell here, editor of the Daily Reckoning Australia, and I thought we'd take a quick look at what's happening in the gold price. Now, overnight, both the Dow Jones and the S&P 500 fell 1.3%, and there's a lot of market commentators out there asking if this is the US correction we've all been expecting. Maybe, maybe not. What I'm interested in, though, is why spot gold hasn't rallied on the back of these falls, because generally that does happen. Now, there's lots of macro events taking place that are quite supportive to the gold price. One of them is a low interest rate in the European or in the Eurozone at the moment, and the ECB have said that they're not going to raise rates until mid-2019. Then we have the tit-for-tat trade wars happening between the US and China. Geopolitical tensions are quite supportive of the gold price. Then we've got the Federal Reserve Bank. Now, they raised rates in June 13. They raised the cash rate up to 2%. And furthermore, at that meeting, they told the market that they are going to tolerate higher inflation for longer. And they didn't put a time frame on it, which means that they're expecting inflationary periods ahead. Now, these are all these factors combined are generally very supportive for the gold price. Yet, a day after that June 13 announcement, the gold price sank about $25 per ounce, and then it's continued to sink another $15 per ounce. So it's currently sitting at around $12.65 per ounce in US dollars. Why is that? One of the counter arguments for a falling gold price is the surging US dollar at the moment. Although, while it is showing surprising strength, it's up about 5% compared to the euro and the Aussie dollar. It's not exactly a really strong currency at the moment. I mean, the US is loaded with debt and it's got instability in the White House. So I don't actually think the greenback is as strong as the markets would like us to think. Furthermore, there is one of the other counter arguments to a falling gold price is that Asian demand is softening. Now, with China and India being the largest buyers of gold, their demand certainly does support the gold price. The problem is their demand is quite cyclical. So a fall in May and June isn't entirely surprising. One thing that should be making the gold price go higher is that Russia is actually buying gold over the past few weeks. Apparently, they've been increasing their gold holdings and dumping US treasuries. So that really should be supporting the gold price a little higher. So gold's fall is quite odd right now. And I wouldn't be surprised if we found over the next few weeks that there has actually been some massive gold sales on the open market, and that sort of suppressed the gold price. Especially true, the chart behavior is quite odd. The Bank for International Settlements, for example, is well known for buying and selling gold on the open market, but they don't tell the market what they're doing. It's only when you start going through their statement of account that you find this out. But what does this mean for gold going forward? Well, I believe we're going to see gold fall a little further over the next few weeks. I believe that we're going to see gold hit around $12.50 per ounce. And I think that's probably going to happen in the lead up to the end of August, so end of the US summer period. From there, I do expect a little bit of a rally because $12.50 seems to be the price where more gold buyers come in. The upside of a low gold price, though, is that it does mean good news for gold mining stocks. As gold price falls, you'll often find that gold mining stocks tend to get savaged along the way. So if you have been looking at wanting to expand your gold investments and you feel you've got enough physical bullion, maybe have a quick look at what gold mining stocks are floating around on the ASX and on the international markets. That's all from me today. I'll see you later in the week with more.